To build anything that truly lasts, it takes time.
Let's get in conversation with Peter McGuire, CEO at AustraliaTrading.com, who's joining us on the show to make sense of the implication of these comments and the kind of reaction that we've seen coming in from these oil indices. And Peter, hi, morning. That's my first question to you exactly. What kind of repercussion do you think Trump's comments have had on oil? Do you believe that this geopolitical situation that's brewing right now could have a further impact on oil prices, and maybe we could see a slight bit more of cooling off?
Absolutely, and good morning. I think so. I mean, you saw that overnight down 1.5%. I'm noticing in trade now you're looking at just about 69 for Brent, 66.70 for WTI. The comments are fairly direct, and there's no ambiguity with the message. That's what I'm reading into it. I mean, he's got 50 days that Russia needs to come into line as far as this situation with Ukraine, and they're looking at reaching a deal sometime by September and threatening 100% secondary tariffs on nations purchasing Russian crude, or Russian energy. So all of those factors rolling forward, I think, are going to be hard to digest for anyone to say, I want to keep on doing business with Russia, because the impact it's going to have naturally to their internal budgets, and I think is going to be very, very difficult to stomach.
Right, that's the take coming in on the oil prices. But Peter, amidst this fresh tariff announcements and the fresh rates that Donald Trump is announcing every day, this safe haven demand, rather the demand for gold, is seen to be fading away. Do you believe that for now the gold is something that is not catching the eyes of the investors right now, and there could be some bit of a sell-off from those higher levels?
I don't necessarily think a sell-off. I feel as though it's a consolidation phase, and that 33 to 34.50 sort of handle, it'll oscillate between those. The standout has been its little brother. It is absolutely on fire, and we're at 14-year highs for silver, I'm referring to, and it's outperformed gold. And I think a lot of the smart money's jumped track and looking at little brother as probably more opportunity, and that's been very much demonstrated in the last probably month or so, 2 months. We've been calling that one. And the overall momentum, keep an eye on $41. They're a critical shortage as far as silver. And don't forget the huge impact that it has to all forms of energy, certainly photovoltaic and electric vehicles. So gold, I think its best days are ahead of it, and silver, keep an eye on it now.
How do you think, though, Peter, silver is going to pan out after this knee-jerk move that we've seen in the last 2 days?
Well, Aisha, I think good to see you. I feel as though the overall momentum, what we saw on COMEX on Friday, was very, very strong. Up, I think it's about 6% up over that 2 trading days or more. And the overall theme seems to be one of gathering steam. At the moment, there's a lot of demand out there. There's a lot of, I think, investors are looking at it from a real standout as far as what's achievable. And there's the chart there. I mean, it's really been very, very dynamic. So we've got to be conscious of that. And I think it's probably got the potential to take, that $42 handle out sometime over this quarter. I know we're only early into the phase of it, but the overall theme and momentum seems to be very bullish at the moment.
Okay, Peter, appreciate that view, and thanks so much for joining us this morning to give us a sense of the move that we've seen overnight in gold as well as crude. Thanks once again.